In your markets news, Asian market participants were said to be exercising caution today. This as concerns mount around China's economy and a run of soft data coming out from that country. Supply chains in the region were also said to be causing concern, with 8 out of 9 Asian manufacturing countries surveyed reporting that bottlenecks were there in their system with longer delivery times. In Japan, the Nikkei share average ended the day up 0.33%. In Hong Kong, the Hang Seng index rose by 0.24% to close at 26,090 index points, while on mainland China, the Shanghai Composite Index firmed by 0.84%. Over in the United States, the Nasdaq closed at a record high, with the S&P 500 ending near its previous peak. September kicked off with renewed buying of technology stocks and private payrolls data, which supported the case for dovish monetary policy. Data out yesterday showed U.S. manufacturing activity unexpectedly picked up in August amid strong order growth, but a measure of factory employment dropped to a 9-month low. The Dow Jones Industrial Average fell 0.14% to close at 35,312 index points. The S&P 500 gained 0.03% to end at 4,524 index points, while the Nasdaq Composite added 0.33%, ending at 15,309 points. Well, it's a fairly dreary day on the local equities market, with the all-share index trading in the red. It's also been a day where there's been a slew of company results, including insurance player Santam, Discovery, which scrapped its dividend and indicated that it may need shareholder support to raise funds, and Impala Platinum, which posted healthy results and gave shareholders a dividend of 12 Rand a share. We'll get into all of that in just a moment with our analyst, but first, let's take a look at the indicators. Well, to take a closer look at what's moving the markets, I'm joined by Patrice Rassou. He's Chief Investment Officer at Ashburton Investments. Thanks very much for joining us, Patrice. What's your reading of global markets today? What's driving sentiment? And it does seem that there's a lot of anticipation around the US non-farm payrolls that are set to come out tomorrow.
Sure. Good afternoon, Nampu, and to your listeners. A dreary day indeed on the JSE. A lot of red around, really driven by results. We expected a much better open, given that the Chinese tech companies opened quite strongly this morning on the Hang Seng. But really, we're taking our cue from results, as you already mentioned, leading the downside with the JSE down almost 80 basis points. Discovery, as you mentioned already, results out. Quite disappointing, earnings declining by 9% and indicating that their losses in the bank, in Discovery Bank, still at over R1 billion in the past year, and the need to have a 1.5 billion rand rights issue. So the share under pressure, 7.6% down. Also more surprising perhaps is Impala Platinum, which published very good results, up 125% with a hefty dividend of 12 Rand per share, and yet the share is down 7.7%. Perhaps the concern as to what the management will do with a big cash pile of 23 billion sitting on the balance sheet. And then more pedestrian results from Santam with the dividend up there, revenue up 5%. Some pressure from the property losses. If you recall, the Cape Town fires, there the share is slightly down 1%. So that's on the downside. On the upside, Aspen really, after posting good numbers, up 5.6%. That's really on the back of their debt burden reducing from 28 billion to 16 billion. So the market liking that, and they're announcing some revenues from the filling and finishing for the J&J vaccine, about 400 million in the third quarter. So benefiting from that activity there in their manufacturing operations. And top of the pops, Motors, the vehicle distributor, up 13.6%, really doing well. Their earnings above the pre-COVID level, very good cash conversion. strong sales up over 100%, really showing that SA Inc. and the consumer back on track after really being very, very cautious over the last year.
Thank you very much for that detail on all those companies. Just going back to Discovery with the losses on the bank that they've set up, do you think they bit off more than they could chew, especially given that it's already quite an established environment in the South African economy?
Yeah, it's a very good question. I think going alone when the banking business was really in partnership with First Rand before is a lot more difficult than I think many expect. It's high capital intensity. While the brand carries Discovery, I think the investment burden is quite hefty. And as we've seen with Bank Zero, it takes longer than expected to get to that break-even level and to be able to offer the right services or differentiated services to a very, very competitive local landscape.
And then just looking more broadly at what is expected internationally around the non-farm payrolls, why is that number important in terms of the impact it will have on South Africa, depending on which way that number goes?
Yeah, very good question, Nampu. I guess non-farm payrolls will indicate the state of the U.S. economy and the direction of the Federal Reserve Bank. What we've seen over the last few months is that the American unemployment levels were quite sticky because of the level of grants that were awarded to them during that period. So what we're seeing in many states is these COVID grants being phased out, and we're expecting Americans to go back to work because there's just a high level of jobs which haven't been filled. So that would be an indication that Americans are going back to work, that the economy is getting back to the pre-COVID levels, and provide some certainty in terms of the path of growth going forward. So I think that's why everyone's looking forward to the non-farm payroll numbers.
Very quickly, Patrice, just in terms of the oil price, what direction is that headed at right now, and what came out of the OPEC Plus meeting yesterday?
Yeah, again, we're seeing a lot of volatility, more to the downside and the upside. I think there's always this tension between on the one hand, demand which is picking up and the ability of OPEC to meet that demand. I think the big question mark now is whether there might be further instability in the Middle East given the situation in Afghanistan. Also, that's always weighs on the oil price. But by and large, what we're seeing from OPEC is a willingness and a realization that supply will have to meet this increased demand over the coming year to avoid a runaway oil price, which has been very strong, as you know, over the past year.
Indeed. Patrice, thank you very much for your time, sir. That was Patrice Rassou. He's the Chief Investment Officer at Ashburton Investments. After a short break.